Okay, so I am going to share my screen here. First of all, welcome to Clear to Close. Tonight we are going to be talking about the home buying process from the top to the bottom. And we want to be able to help you understand what it all takes, what it looks like, give you realistic information from people who have done the process already, and some of us have done it a few times. Sorry. So first, let's see here. I'm gonna introduce myself, and then Cameshia, you can go next, and then Shanta and April. So I am the credit specialist. I'm the person you come to when you have questions about your credit, as far as what to do to beef it up, make your profile look better, or if you need to simply just rebuild your credit. I'm that person you'll come to for those types of questions, and I have a couple different options, just depending on what you have going on. But I'm very realistic with the time frame. I'm realistic with what I can do for you. There's no quick turnaround or some kind of magic that I do, because I do everything the legal way. So if you need help with that, definitely let me know and I can do that for you. If you need help with budgeting, I can help you with that as well. And I think that's pretty much it. So Cameshia, you can go next.
Yep. So I'm Cameshia Gavin with CC & Co Real Estate, powered by Fathom Realty. So I'm the real estate agent or realtor. Once you've gone through, if you have credit issues, once you've gone through that and gone to a lender, I am the person that helps you find your dream home and represent you from start to finish.
Okay. Shanta, are you there?
Yes. Hi, I am Shanta Rackley. I am with CC & Co Realty, powered by Fathom as well. I am on the team with Cameshia. I am a realtor. And so once you've made it to the point where you're ready to start home shopping, that's where I will come in at. I specialize in first-time home buyers.
Wonderful. April?
Hey everyone, I am April Russell, and my, I guess, official title is mortgage loan officer, but you can just call me the money lady. So my goal is to find the right loan for you, the right programs, and find what is best suited for you. And that's my role in this process.
Perfect. Okay, great. So I want to just go over quickly what the show will look like, as far as what we'll be talking about, so you guys can know, what to look forward to, but also when you guys can ask your questions and all that kind of good stuff. So we're going to talk about what your profile should look like as far as credit, pre-approvals, types of loans, working with a realtor, where you want to buy, home options, what to do under contract, what not to do under contract, what to expect at close. And at the end, I told you guys we have a announcement / giveaway going on. So let's get to it. So I'm going to share my screen really quick and just show you guys this little PowerPoint thing that I put together really quick. It's nothing crazy. All right. Let's see. Let me know when you guys can see my screen. Can y'all see it?
Yep.
Okay, so I'm just gonna quickly go through these. So basically, you want to learn about what your profile should be looking like when you have a good credit profile or a decent score in order to purchase a home. So the first and the easiest way to build your score and the easiest way to tear down your score has to do with paying your bills on time. One single late payment can drop your score up to 100 points, so try to avoid them at all costs. But as you continue to make payments on time, it's gonna increase your score gradually over time. I like to give my clients a couple of options when they feel like they may be late for some kind of payment. A couple of things you can do is call your lender in advance and let them know, hey, I have a situation going on. I only have $25 today. I can pay the rest on another day. You have to let them know, because this is a relationship that you are building with them. And when you communicate and you kind of let them know what's going on, they're able to help you. They can't help you unless you say something about it. So you do have some options when it comes to that kind of thing, but you cannot use that every single time. So just make sure that you are paying your bills on time and keeping up with when your bills are due and all that kind of good stuff. All right. Keep your credit utilization low. So this is worth 30% of your overall score. So paying your bills on time plus keeping your utilization low is 65% of your score. That's the majority of your score with those two columns alone. So if you have credit cards, pay them down, don't close them out. Keep them below 20%. You can ask for a limit increase every 3 to 6 months. If it helps beef up your profile, then do that. Don't close any accounts. Closing accounts will make your score go down. But yeah, if you don't have any credit cards or credit builders, get at least 2. I can help you with those. But if you already have credit cards, pay them down to 20%. And if you need a strategic way to do that as well, I can help you too. But let's move on. All right, maintaining a long credit history. So for most people, you have maybe a couple of credit cards, your rent payment, your phone bill, a car payment, student loans, and things of that nature. You want to have a profile that is robust, that has different types of not contracts, but different types of accounts on the profile open for at least 7 years or more. It's okay if you're at 4 years or 5 years. Eventually they'll grow till 7, but 7 years or more with no derogatories, no lates is how you get a really good profile. You want to show them that you can maintain a good, positive relationship over a long period of time. And each of the accounts that you have open, no matter if there's an account that's open for 2 years and another one that's open for 5 years and so on and so forth, the average of those accounts, the time frame is what is going to produce your history, your time frame of history. All right, limit new credit applications. Of course, don't run credit during this time unless you absolutely have to. Typically for my clients, they need to get a car for an emergency reason. But other than that, I say don't run your credit because you are trying to get a new home. You don't want to rack up no more than 2 or 3 inquiries per account. So make sure you are not running credit. Oops. All right. And then regularly check your credit report. If you need a copy of your FICO score, I can get you that for $1 today. I'm going to put that in the chat, but you want to make sure that there's nothing on there that is inaccurate. You want to make sure the spelling of your name is correctly. You only have one social. You only have one address on your profile. All that stuff helps to create a profile and maintain a profile that is good, because typically with accounts that are negative, they more than likely have old addresses and all that on there. If you are looking to do any disputing and things like that, you want to just have one single address, which is your current address on your profile. All right. And use of different types of credit. So I kind of talked about this before. Mix of credit cards, loans, auto loans, mortgage, whatever the case may be, student loans. You want to have a different mix. And then maintaining a great credit score is kind of the same thing. So continue to pay your bills on time, keep your utilization low, avoid too many new accounts, regularly check your credit report, keep accounts open, avoid closing accounts, and use different types of credit. So I will post this kind of at the end, but that is it for my piece. Let's see here. Now, I think April, you can go ahead with pre-approval.
All right, wonderful. So did you make me host already?
I did. Multiple participants can share, so you should be able to.
Oh, okay. Got it. All right. So before we jump in, really, what I'm going to be talking about is how you can get pre-approved to purchase a home and exactly what is required or what is needed in order for you to get pre-approved. So give me just a second. I'm going to share a PowerPoint here, and I am trying to, well, hold on. I have two screens up, so maybe that's why it's not popping up. Hold on one second. There it is. All right, are you all able to see that?
Yes.
Okay. Trying to put to begin this from the beginning. Okay, so do you all see slideshow or actual just the screen, or you see stuff on the side too?
Stuff on the side too.
I don't know how I'm gonna move this. Okay, hold on. Oh, it's okay. Just we'll let it go because I don't have any notes on anything I'm talking about. All right, so I pretty much already introduced myself, so we don't necessarily have to go through that. But the lender that I work for, so as you all know, there are several lenders and banks out there. But the lender I actually work for is Movement Mortgage. There are several, again, there's several out there. There's several I could work for. I work for Movement because they stand for what I stand for. That's all I can tell you about that. You can go to movement.com/about for more information, but we do a lot of giving back to the community. That's why I am associated with Movement. So why you should buy instead of renting. So there's a few perks to doing so. Obviously, purchasing a home is a very wise investment for you to make. Your home is going to increase in value. And of course, you can build what is called equity. And there's also tax advantages. In addition to that, it's yours. If anything else, it belongs to you. If you want purple walls, then your walls are purple, red, or whatever you would like for them to be. So again, those are some advantages. How you begin this process really is finding your team of experts. Ultimately, you've already done that. You found us, right? So you've got Tamaya to assist you with the credit. You have Cameshia and Shanta can help you with finding a home. And of course, you have me. Now, I say this in any class that I teach. I am one person and I am just one loan officer. And because there are so many other lenders out there, listen, if I was the best and had all of the right products that would fit the mold for everybody, I would be the only one. I'm not the only one, right? But I will tell you what you need to do in order to get pre-approved. And if what I have for you is not best, I'm going to guide you and tell you where to go to get it from, okay? All right, so when we're looking at getting pre-approved, there's a few things that we are looking at. We're looking at your credit history, your employment status. So with that, we are looking for 2 years of employment, but it does not have to be the same employer. Okay, so if you were a nurse at UNC, now you're a nurse at Duke, whatever that looks like. I've got a young man right now, bless his heart. He's had 10 jobs in the last 2 years, right? Not ideal, but that's how many jobs he's had. So we just collected all of those W-2s in terms of getting him qualified. So employment status, again, 2 years, doesn't have to be the same employer. Qualifying income. So ultimately, we're going to be comparing your income and your debt to determine your affordability. Down payment matters, but not necessarily. And we're going to talk about that briefly in a moment in regard to programs and things like that. So as far as the importance of your credit history, Tamaya kind of already talked with you about this as far as your payment history, amounts owed, all of that. So you want to keep that in mind, of course. She already talked about the importance of your credit history, so I'm going to pretty much skip through that for the most part. How much house you can afford. So this is where we calculate what is called your DTI, which is your debt to income ratio. If you don't do anything else tonight, I need you to take a screenshot of the screen that you are looking at right now. Okay. One thing about me, I am very transparent. So I'm going to give you a sample here of how we determine how much house you can afford. But screenshot this, or we can even get this sent out to you after the seminar tonight, because I do have it in a PDF form. But I want you to have this example so that you can actually calculate it for yourself. But I don't expect you to be a mathematician, okay? So when we have an individual consultation, I can go over this with you, but I do briefly want to address it. So one of the first things I want you to notice is that this says gross income, meaning we are looking at your income before your taxes are taken out, before you're contributing to your 401k, before you're paying for any benefits that you may have with your employer. So that's really important, because one of the first questions I will ask you is, what monthly payment are you comfortable paying? And if you don't know that number this evening, you need to be thinking about that, simply because 9 times out of 10, what I tell you you can afford might not necessarily be what you want to pay, because again, I'm basing this off of your gross income. So let's talk about this. We have 2 people here, and together they gross $7,000. So these are debts here that they have: a car payment, student loans, a personal loan, and a couple of credit cards. When it comes down to how much house they can afford, we look at your gross income, and basically the government says, okay, this is not April, this is not Movement Mortgage, okay? This is not the credit union or anybody else, okay? The government says your income or your debt should not total more than 45%. That's what they like to see. Now, there are loan programs that allow for higher debt ratios than 45%. We're going to look at 45% because if you need to pursue down payment assistance or any type of 100% financing program, you are limited to this 45% ratio. So let's look at it. So for this couple, their debt threshold is $3,150. That is how much debt they can afford, which has to include a mortgage payment also. So if we look at the current debt that they have, again, the car payment, the loans, one thing I will point out with your credit cards, obviously you need to be paying more than the minimum payment on your credit card. However, when we calculate your affordability, we are only using the minimum payment. So if your minimum payment on your Capital One credit card is $25, that is all that we are using in our calculation. But it's best, of course, that you pay more than the minimum payment so that you can avoid paying all of the interest that's associated with having a credit card. So that's one thing to point out. The other thing I want to point out is that if you have a car loan or any type of personal or installment loan, if you have less than 10 payments remaining on those loans, we do not count them against you. But that's if you have less than 10 payments. Now, I left student loans for last because, hey, who's got them? I do. Throw your hands in the air, wave them like you just don't care, right? Got student loans. So here's what I will say. If you've ever heard someone say to you, well, I tried to buy a house and I couldn't because of my student loan debt, I would say maybe about 4 or 5 years ago, that might have been true, right? What I will tell you today is that there are different ways that we can actually calculate your student loan debt. So if you have student loans, I would like for you to do the following. I want you to contact your student loan servicer and ask them, if you were to get on an income-based repayment plan, what would your payment be? Okay, and that is if. I am not telling you to get on that plan, all right? Don't get off of this call and call the Department of Education and say that money lady told me to get on this plan. No, I did not. I want you to call and ask if you were on the plan, what the payment would be. The reason why that is so important is because there are a couple of loans out there where if your income-based repayment on your student loans is 0, guess what we're accounting for your debt to income ratio? 0. We're using 0 as well. If it says your payment is $50 a month, we're only using the $50. I have someone now, their payment is $15 a month, and that's it, because they're on an income-based repayment plan. That is important because the other ways that we can calculate your student loan payment is to either do 0.5% or 1% of the balance. So in some cases, the affordability is not there if we have to do that 1% calculation. But if you can get on an income-based repayment plan, we could use that payment. So the reason why I want you to find out what the payment would be if you were on the plan is because when you're calculating your debt to income ratio, we can look at it both ways. What if we're on the income-based repayment plan? What if we're not and we have to do that 0.5% or 1%? Because for some of you, it may very well be affordable for you to still have that 0.5% or 1%. Where for someone else, we need the income-based repayment plan, okay? So I definitely want you to, again, find out what it would be if you were on the plan. So ultimately, if we subtract the amount of debt that they have, this $2,225 here, this is how much house payment that they can afford. Now, more than likely, they probably said to me, April, we don't want to pay more than $1,600 or $1,700 a month. Because again, remember, my number is usually going to be higher than your comfort level, and that's okay. So be thinking about what your number is, because what we don't want to do is put you in what we call a house poor situation. I don't want you to have to pick up an extra job or extra hours at your current job just to pay for a house that you cannot enjoy because you're working all the time just to pay for it, right? That's not living. So we want you to achieve the dream of home ownership, but we want you to be able to live life as well too. I want you to be able to still go to the movies. I want you to get your white chocolate mocha, right, from Starbucks or whatever it is that you enjoy from there. But I want you to still be able to do those things, but also, of course, own a home as well. All right, so moving along. What is in your mortgage payment? So in your mortgage payment is ultimately your principal and interest, which is actually paid to the bank, your property taxes, as well as your homeowner's insurance. What may also be in your mortgage payment is this wonderful thing called PMI, private mortgage insurance. So if you've never heard of PMI, I will give you a brief definition of what it is. Ultimately, it is an added fee in your mortgage payment that does absolutely nothing for you. It is security for us as a lender that if you were to default on your mortgage and we have to foreclose or take the home from you, basically, that we can recoup some of the money that we're going to lose because you could not complete your loan term and pay for the home. Now, anytime, here's the skinny on PMI, because people will say, oh, I don't like PMI, I don't want PMI. I love PMI, but I love PMI because I know the history of PMI. So here's a quick history lesson. Back in the 50s and 60s in this country, in the United States, if you did not have 20% to put down on a house, you could not buy a house. That was the requirement. You had to put down 20%. So think about that in today's terms. Buying a $200,000 house would mean you have to have $40,000 in order to buy it. That's not realistic, right? So the government said, okay, it's not realistic. Everyone doesn't have 20% to put down. So instead of requiring 20% down, we'll take lower down payments like 3%, 3.5%, or 5%, and just add this extra fee, mortgage insurance, into the monthly mortgage payment. So that's actually where it derived from. So I know some people will say I'm not a fan of it, but if it wasn't for PMI, I don't know that I would have been able to buy a house the first time. I didn't have 20% to put down. So that's kind of the skinny on PMI. So when it comes to how much you need for a down payment, here's the thing. There are so many different programs and options out there. We just need to really discuss it because there are options for 100% financing where you don't need a down payment at all. There are programs that require 3% or 3.5%. There's also down payment assistance that would actually cover that for you. Again, so many options out there. So I definitely don't want you to be hung up on down payment at this point. So back to what it takes to get pre-approved. As I mentioned, we're looking at your income, your debt, doing your debt to income ratio. And of course, we're looking at your credit score, and your credit history. Now, here are 10 things that you need to follow. And a lot of times we'll say, follow this once you start looking for a home or after you get pre-approved. I'm telling you, the fact that you're even thinking about purchasing a home, you're on this call tonight, start doing these 10 things now. And I don't care if your lease doesn't end until October, do it now and start following this, okay? You can Google this, but these are the 10 commandments of home buying. I'm not gonna go through all 10 of them. I have a story for all 10 of them, but I do want to point out a couple of them just for understanding purposes. And also I will tell you this, if you need to do any of these 10 things, you have to commit to talking with your lender or loan officer first before you do any of these items, because there is a way for you to do these, but you need to talk to your lender or loan officer first so that we can tell you how to do it. All right, so number 1, thou shalt not change jobs, become self-employed, or quit your job. Okay, now for those of you that are sick of the job you're on and you're looking for better opportunities, completely understandable. Okay, and it is okay if you change jobs. However, it will matter if we're going from being paid by the hour to now salary, or we were salaried and now we're paid by the hour, or I was salaried W-2 and now I want to start my own thing and be 1099 and contract, right? So when we're factoring income, those things all matter. So there is a way to properly leave your job. You just need to talk with me about it first, if that's what you need to do. But it's preferred that once you're under contract, don't change jobs. But you can do it. Just talk to your loan officer first so that we can tell you how to do it. The second one, thou shalt not buy a car, truck, or van, or you might be living in it, okay? Comical, yes, but true. And I have a story for that. It's a white Infiniti SUV that this couple is still driving to this day. That was 3 years ago. I told them not to. They got the 10 commandments. They sat in a home buyer seminar like you all are right now, and they went out and bought that vehicle. And to this day, they have not bought a house yet. But they look nice riding down the road in that Infiniti. Or do that, right? So the reason why you don't want to do that in terms of buying a car is going back to that debt to income ratio. If you don't have a car payment right now and you decide to get one, you've now affected how much house you can afford. If your current car payment is $300 and your new car is now $800, which I'm seeing that car payments right now are averaging between $800 and $1,000 a month. Like, it's real out here. Okay, it's real. So if you currently pay $300 a month and now your car payment is $800 a month, you have also affected your affordability. Okay, so I'm not telling you can't buy a car. I'm saying talk to me about it first before you buy the car. Another one I want to point out is number 6 about not buying furniture. And you're probably like, well, April, I'm buying a house. Why can't I get some furniture? You absolutely can. But what I don't want you to do is get excited after Cameshia and Shanta get you under contract and you ride down 95 and go to the rooms to go and just open up a credit line and start shopping. Okay, because you didn't have that credit line or that bill to rooms to go when we started this process. So again, you're now affecting your affordability. So my rule of thumb is this: you close at 12 o'clock and you get your keys and you're recorded, hit rooms to go at 2. You are a free spirit at this point, okay? But let's get your keys in your hand first. All right. So again, these are things you want to start following now, even though it might be some time before you're actually making the purchase, but I do encourage you to follow them now. As far as the different types of loans, so I won't hang out here too long with this just because my ultimate goal is for you to leave this tonight knowing there is a loan out there for you. It's just a matter of finding out what it is. And everyone's financial picture is different. So what I might say is a good loan for Geraldine might not necessarily be the best loan for Angelica, right? It all depends because all of our financial pictures are different. It might be that your sister didn't qualify for 100% financing, but you do, right? So because it's all different, I don't want to hang out here too long. But here's what I say. Conventional loans are great loans to have. Low down payment as a first-time home buyer, 3%. And we can also pursue down payment assistance to help cover that for you. Okay. I wouldn't necessarily hang out with this credit score requirement, but technically, if you are 680 or higher, this is a great loan for you to consider. Okay. But can someone get a conventional loan and their score is lower than 680? The answer is yes. And I'm going to tell you in just a moment what the magic number is as far as when it comes to purchasing a home. So you also have what are called government and bond loans. So that's going to be FHA loans. They require 3.5% down. USDA is 100% financing, no down payment whatsoever. And then you also have state bond programs. So things like the NC Housing Finance Agency, which they just announced their assistance program is actually going up to $15,000 effective April 1st. So it might be that we can get you qualified to get that $15,000 of assistance, right? Also, veterans, if we have any veterans on here tonight, thank you for your service. You can, of course, pursue a VA loan that does not require a down payment at all, and it offers you 100% financing. So which loan is right for you? That's the purpose of you having a consultation with me, for us to talk about it. Because like I said, what works for one person may not necessarily work for the next person. So we really need to talk about your financial picture, and I can pretty much lay out what I call the platter for you to actually show you, okay, these are options that you can ultimately choose from. So I'm going to touch on interest rate briefly here, just because people are saying right now, don't buy a house. Interest rates are too high, you know, it's just not a good time. Here's the beauty of the time that we're in right now. Yes, interest rates are slightly higher, but you also have to think about what caused interest rates to be as low as they were in 2020 and 2021, where people were getting 2.75 and 3% interest rates. Great interest rates, but we had a whole global pandemic for that to happen. That's why the rates were there. So the likelihood that rates will go back to that is very slim, very slim. Like, we might not see that again in our lifetime, if I'm being totally honest with you. So here's what you need to know. Marry the house, date the rate. What does that mean? Do not make a permanent decision based on a temporary situation. Okay? So your permanent decision is, of course, purchasing a home. It's an investment for you. The temporary situation technically is the interest rates. Because guess what? If you bought a house right now and the interest rate stayed the same, okay, great. They stayed the same. If they went up, you're going to be like, hey, I'm glad I got in when I did. And if they come down, guess what you can do? Refinance the loan. Okay? So here's why now is a good time for you to buy a house. Home prices are not coming down. They are not. They are, your home is an appreciating asset. It is going to continue to gain value. So the same house you can buy today for $300,000, 6 months from now will not be $300,000. It will actually cost you more money at that time to buy it. And then I actually had someone make this argument with me, and I want you to think about it. He said, okay, April, well, the house is going to cost more in 6 months, but what if the interest rates come down? Okay, so lower price home, high interest rate, lower interest rate, higher price home. We're breaking even here, right? We're pretty much almost breaking even. So you don't need to wait because of what you're actually losing out on, which is building equity. Your home is, again, appreciating, gaining value, and there's so much that you can do with the equity in your home. Some people send their kids to college with the equity in their home. Some people consolidate their debt with the equity in their home. There are so many options. Some people use the equity in their home and buy another property. I'm not telling you to become a landlord or a real estate investor, but I'm just saying there's so many opportunities with home ownership. And I want you to see home ownership and your home as an actual asset and not a liability. Don't see it as a bill. It is an investment. And that's how you need to look at it because of the value that it gains. So I have here 2 examples. I'm going to go through them really quickly, but this is just to give you some idea of some actual live homes right now on the market and what payment looks like for them, as well as programs. Okay, so we're going to look at 2 houses real quick. One's in Clayton, one is in Raleigh. One is a single family home, the other is a townhome. All right, so this is the home in Clayton, the single family home. It's listed for $254,900, and I want you to see here in the right corner here, your 5-year gain. That's your 5-year gain estimated of equity that you will earn in that home. Here is the estimated monthly payment for this home. This also qualifies for USDA 100% financing, $8,000 assistance to cover your closing costs, and voila, you get money back at the closing table if you were purchasing that home. This is a home in Raleigh. It's a townhome. It has, of course, what is called homeowner association dues. This is your estimated 5-year gain in equity by owning this particular home. This is your estimated payment, but it also includes your homeowner association dues. Now, you're more than likely looking at this and you're like, look, April, we're not making that much of a payment. We're just not doing it. I get it. I understand. But I will remind you of this. Rent is going up as well. Okay, so we've got to make a decision. Are we buying a house and paying our mortgage, or are we going to keep continuing to rent, and the rent is going to keep increasing as well? So we've got a decision to make. And our goal tonight is to help you all walk through this process and show you financially what you need to do. It might be that you need a budget. It might be that you need to save more money. It might be that you need to pay down some debt. It might be that you're actually ready right now, and maybe perhaps you just didn't know that you were. That's the purpose of us being on here tonight. So if you say to me, April, forget it, absolutely not. I am not buying a house right now. I appreciate the call, not doing it, okay? Here are the 3 things that you need to do. You need to fix your credit, live on a tight budget, and you need to save as much money as you possibly can. The reason why you need to do those 3 things, and I'm going to stop sharing because I'm pretty much done at this point. Everything else I have to say, I could just say it. But the reason why you need to fix your credit, of course, is so that you can actually compete out in the market. The reason why you need to live on a tight budget is because of the 3rd thing that you need to do, which is save as much money as you can. And the reason why you need to do that is because if you have determined that you are going to wait, and others have also determined that they are going to wait, you are going to have more competition by waiting, meaning that you're going to need more money when it comes to purchasing your home. So I kind of walked you through the pre-approval process, what we're looking for. In a nutshell, income, debt, credit score. Those are the 3 main things that we're focused on. Your pre-approval process literally can take 24 to 48 hours from the time of you completing an application and providing the documentation, which I didn't touch on the documentation. I will give you a brief synopsis of it, but the documentation is going to be different based off of your individual picture. For some people, I might need your tax returns. For some, I might not need your tax returns at all, okay? But we're looking for things like your pay stubs, bank statements. We're looking at 2 months of your bank statements, your W-2s, your tax returns, and your driver's license. Those are kind of the initial documents that you need to present to actually get pre-approved. But like I said, that process, 24 to 48 hours, boom, you are pre-approved. Once you are pre-approved, at that point is when you connect with Cameshia and Shanta to actually begin your home search. So, because I know people wonder, who do I go to first? You can absolutely call Cameshia and Shanta first if you would like, but one of the first questions they're going to ask you is, have you been pre-approved for a mortgage? And if your answer is no, they're going to say, hey, you need to call April so that you can actually get pre-approved first. So once you've been pre-approved, you've got your pre-approval letter in hand. We're excited, yes. And now it's time for you to begin your home search. Are there any questions about anything I just went over? I could not watch the chat box. I don't know if there's anything in there or not.
Y'all don't be scared to ask questions. That's why we are here. So did anybody unmute themselves? Go ahead if you have a question. Sylvester.
I got a question.
Thank you, Meta, I didn't give you the number. Sylvester, go ahead, because you came off mute first, and then I'm gonna answer Meta's question. I didn't give you the magic number. Thank you for the reminder.
Look, my question is regarding, is it some kind of plan that you provide that if nobody don't have those loans and stuff like that, no car payments and none of that type of stuff?
So if you basically don't have any credit at all,
Yeah, I don't.
that what you're
Yeah, I
referring
ain't
to?
started credit. Yeah, I haven't started any type of credit.
okay. So with not having any credit at all, we can actually use what is called non-traditional credit references. So we can use things like your utility bill, which by the way, we're looking for 1 year of payment history on that. So we can look at your utility bill, like your water bill, light bill, your cable bill, the Spectrum, your cell phone bill to whoever your carrier is. The main thing is we need a year of that history, and you need to have been making those payments on time. So we don't even want to see that City of Raleigh added a $5 late fee to your bill, even if it's not 30 days late, because I think after a certain number of days, they'll add the fee in there. We don't want to see the late fee at all. It has to be on-time payments for the past 12 months. But we can do that if you absolutely have no credit whatsoever. So we still pull your credit. And of course, the bureaus will tell us that you have no credit history out there if you truly don't have any history. And we can use those non-traditional references. So magic credit score number. We have loan options that can go down to a 580. However, or but, right? Because the but cancels what I just said. So, but I encourage you to have a 640 or a higher credit score. And the reason why I encourage that is because if you need to take advantage of any of those government programs that I mentioned, 100% financing or down payment assistance, like that $15,000 I mentioned, you need to have a 640 or higher credit score. So if you are on this call tonight and you're like, April, girl, I know my credit score is not 640. Here's the thing, and here's how I want to help you, and here's how we're all a team in getting this done for you. So Tamaya is here, of course, and she knows all things credit, right? What I can do for you is I can review your credit, run what's called a score simulator and say, okay, play around with it. If we paid this down, negotiated pay and delete of this old collection or whatever, this is where your credit score will go. And it will also give me the time frame that it will take to get it there. The beauty of having that score simulator for you to have that, because I do provide it to you, is so that you can actually share that with Tamaya. Because now Tamaya, not that she wouldn't already know what to address, but she's going to have specifics from an actual mortgage lender of exactly what needs to be addressed to get your credit score to where it needs to be to get you qualified.
Right.
So I recommend 640 or higher just because it opens up a window of opportunity. But there are options down to 580. But you won't ever see me advertise that I can go down to a 580. I'm just not going to do that. I say we reach for the stars. We can. The high score is 850. Let's go for it, you know?
So let me ask you another question. What about if you find like, because I see a lot of houses, you know what I'm saying, in different places, and they just vacant, you know what I'm saying? Like, can you just buy them houses? Like, you know what I'm talking about? Like, if you got the money and you buy the house and then like, you know what I'm saying, then get a loan and then restore the house. What's your theory on that?
Okay, so you're referring to like abandoned homes and things like that.
Right, like a you know what I'm saying, foreclosure, stuff like that. You know what I'm saying?
Okay, so I'm gonna address rehabbing the house first, and then I'll come back to foreclosure. Because they're technically not gonna be the same. Because necessarily all abandoned homes aren't necessarily in foreclosure. It might be that it was grandma's house, nobody wanted it, and nobody, maintained it or whatever.
Okay.
But can you purchase a home in that sort of condition? Yes. So you could do your first option that you mentioned. If you have the cash to buy it, have the cash and buy it. we can do a refinance, get you your cash back, basically. You can rehab the home. Or you can actually just get what's called a renovation loan that will include the price of the house and the cost of the renovation all into one loan. So that is also an option. When it comes to foreclosure, of course, you can get with Cameshia and Shanta in regard to if you're looking at a home that's possibly in foreclosure, just because there are some stipulations with homes that are in foreclosure. It might be that they're only accepting conventional loan offers. It might be they're only taking cash offers. It all depends on what that lender or bank is looking for when it comes to foreclosure. But could you buy a foreclosed home? Yes. I will tell you that they are few and far between right now. So even what you're seeing on the news, like, oh, the foreclosure rate is up 150%. Yes, it is, because they couldn't foreclose for 2.5 years while we were going through COVID. So that's why it sounds like on the news, oh my gosh, the market's gonna crash. Foreclosures are up so high. It's not that they're up so high, they just opened up where you can actually foreclose on a home now.
Gotcha.
Larissa said, is it a certain time of year that you would recommend to purchase a home? No, I say you purchase a home when you are ready to purchase a home. Winter, spring, summer, fall, it does not matter. There's no, that's my answer. I also let Cameshia and Shanta address that as well, but that's my answer.
I agree with April. Whenever you see fit for you to buy the home is when it's the perfect time.
Well, what you said earlier, you said it's best to go ahead and buy them now because they're going up, right? That's what you said in the tutorial earlier. So the best time is any time, like you said earlier. That's a smart way to do it. And they only gonna go up. They're not going down, just like you said.
Right, absolutely. Any other questions? Are we all excited? We all just got pre-approved, okay? So we're like walking you through the process. You got your pre-approval letter, and now you get to talk to Cameshia and Shanta.
Yes. Yep. So what we'll talk about is the home buying process. I will make it short and sweet because for Shanta and myself, what we do, once you do have your pre-approval, we try to make the process as seamless as possible for you, keeping you updated every step of the way so it doesn't feel like you're alone. So once you've gotten your pre-approval, you've been pre-approved by April, now it's time for us to go home searching. So your first step in that is sitting down with us and having us understand what exactly it is that you're looking for in your home. If that's bedrooms, bathrooms, square footage, location, new construction, resale, that is what we want to sit down and talk about with you to understand exactly what we're looking for. And of course, based on your pre-approval, we know the budget too. So that helps us to start your home search. Once we've completed that step, what we do is set you up on our website just based on the criteria that you've given us. And we will send you any homes that fit that criteria. So as you're browsing through the homes, we do look every day as well. But if there are, and I like to say, if it's a couple of them, get a couple of them, a list of a couple of them, and we will go tour those homes. It might be over a couple of days, but we try to get a couple of them so we can knock out a few in a day that we can go look at. So based on that, we'll look at the house, and once we actually find that house that you love and you know that this is exactly the one and it feels like home for you, what we have to do is put in an offer on a home. So, sorry, something's popping up on my screen. So what we'll do is actually put in that offer, and an offer in North Carolina is a couple of different things. It's a 16-page document, but 6 things that really stand out in the offer are your sales price that you're offering, your due diligence money, your earnest money, the closing date, if we're asking the seller for any concessions or asking for any paid closing costs, and also if we're asking for personal items in the home. So to explain on a couple of those, obviously purchase price, it is the offer price that you are offering the seller for the home. And then two big ones here in North Carolina are due diligence money. So everybody's always in a frenzy when it comes to due diligence money. But due diligence money in your offer is basically, in simple terms, is saying, hey, I'm going to offer you X amount of money, Mr. Seller, so that you can take your home off the market so that I can go in as a buyer and do my due diligence in terms of inspections, have the appraiser come in to be sure that the market value is there, and check out anything before you fully commit to purchasing this home. Now, in terms of the amount, there isn't a set amount. That is going to be strictly based on the home that we're going after, how much competition is after that home, price point of the home. It's going to be a couple of different things. So before placing the offer, we will always advise you of what we feel is a good range that you should offer in terms of due diligence money. Now, two different things about due diligence. It does credit back to you at closing. And the other side is, if you walk away from the home, you will lose the money. So I like to think of due diligence as a prepayment of your closing costs, because it does come back off at the end. So I know the part that makes everybody anxious is the part that if you walk away from the home, regardless of whatever reason, you do lose it. So, and that could be, you just get cold feet and you decide, I don't want to buy, you'll lose that home. If you go through inspections, and for the most part, I'm going to brag on CC and Co Real Estate because we do good at negotiating. So inspections are not something that, a reason why our buyers walk away from a deal. So if inspections come up and there are items in that inspection, then we are going to negotiate and make sure that you feel comfortable with that home, whether that means the seller is giving you a credit or if the seller is going to fix those items before. So due diligence money is a really heavy topic when buying a home. So that's one part of your offer. And then there's earnest money. So earnest money is a little similar. It does credit back to you, and that is not written out to the seller. That is actually written out to the attorney. It's good faith money, just showing how serious you are about the deal. Again, that's not a set amount. It just depends on the home and the offer that we're putting in, something that we'll always advise you on, so you don't have any concerns there. And earnest money, we structure your offer in a way that if you were to walk away from the deal and lose your due diligence money, your earnest money will not be tied up. So 9 times out of 10, your earnest money is not going to be tied up. So for the most part, that credits back to you as long as you go to closing. The other thing, now in this market, I think is a great time to buy if you can get pre-approved, because we are getting seller concessions just depending on, of course, the house that you're going after. So for instance, I have a house that I negotiated $15,000 off the sales price and $6,000 closing costs. So now's the time where you can actually get some credits from the seller. So we're asking the seller for any credits. That's going to be part of our offer as well. And the last thing is personal items. So we're asking for any personal items in the home. The ones that are that come up the most are washer, dryer, refrigerator. Those don't automatically come with the home. So if it is something that you know you do want with the home, then that is something that we will need to write in the offer. So based on that, after you submit the offer to the seller has one of 3 options. They can accept your offer, they can decline your offer, or they can counter your offer. And what the counter is they may come back, if we offered $200,000 and the house is listed at $250,000, they might come back and say, no, we want $225,000 or whatever the case is. So that's a counter. And if they accept the offer, then we're moving on to the next step. So once they accept your offer, you are actually under contract at that point. And so once you're under contract, you are then in your due diligence period. So that amount of money that you put down for your due diligence period, you pay for that time frame. So typically it's about 2 to 3 weeks that you're in your due diligence period that you can go through and do your due diligence. But I will allow Shanta to talk more about that.
Okay, so as she stated, the due diligence period is typically within 21 days. So that gives you time to have the inspections done, the appraisal. Once your inspections come back, as your realtor, we will go over that with you, and we'll decide with you what we want to ask the seller to repair, or either they'll say yes, they'll repair it, or give you credit towards your home that you're purchasing. From there, after we've gone through the inspection process, requested the repairs and negotiated that for you, you will receive what we call a closing disclosure. And that you will go over with your lender to make sure you understand the numbers and to also determine how much you will need to bring to the closing table. Once we get to the closing table, any and everyone that is on the contract will need to be present at that time. You will need to bring some form of ID and preferably a driver's license. This is also when you will bring whatever monies that you've already discussed with your lender that will be needed on that day, whether you would need to bring a check or you don't have to bring anything to closing. After that, so at the closing, we're meeting at the attorney's office. You're going to sign a lot of paperwork. After you're done signing the paperwork, it has to be recorded. So there's like a time period. And it could be like a few hours. So during that time, while we're waiting for it to be recorded, we're able to leave the attorney's office. But once it is recorded, I will pick up your keys from the attorney and meet you back over at your home. And at that point, I hand you off the keys and then you're ready to move in. But you don't get the keys until after it is recorded. But once it is recorded, you're all done. And then you're at that point, as April stated, where you're able to go shopping and do your furniture and things like that. And also, when thinking in terms of a realtor, think of us as pretty much like an attorney. We represent you. It is a free cost and a free service to you. The sellers typically pay the buyer's agent on your behalf. And so there's that. Do you have any questions?
While we wait for the questions, I do see a question in there, but I do want to touch on, so everything that we just talked about is strictly for resales. New construction is completely different when it comes to that process. It's a lot simpler, in my opinion. With new construction, once you have your pre-approval, if you know you're going after new construction, there's not due diligence and earnest money. There's simply a builder deposit. And so even if you're going to new construction, you got 3 different ways that you can find the home. The home could be already ready and ready to go. And April needs 30, 45 days to close once you decide that's the house and the builder has accepted your contract. Or you can find a home that is partially ready. Maybe it needs a couple more months before it's done. That process is a little bit different. It's actually fun, just like watching from the ground up. It's fun to watch the home from dirt to it being an actual dwelling at the end. So with that, you're dealing directly with the builder. They have their own contracts. It's very simple. And a lot of times they just want a deposit to hold your home. And of course, the home buying process will make sure that you know that every step of the way. Does due diligence count towards my closing costs? So yes. So what I will say is, in your home buying process, the realtor and the lender, so CC & Co Real Estate and April, work closely together, and we communicate every part of that contract. So if you put down $1,000 in due diligence, April knows that, and she's going to make sure that it's credited back towards your closing costs at the end.
Natalie Harris has a question.
Yes, I was wondering, when Shanta said that we have to wait for it to be recorded, did you mean like for the documents to be filed?
That's when the deed is recorded. So this is just after you've completed all of your paperwork, they have to record your deed. At that point, then they're able to release the keys.
Thank you.
You're welcome.
All right, any other questions at this time?
I did have another question about due diligence. I know, Cam, that you said it's not credited back if we decide not to buy, and then I know just now you said it's put towards our closing costs, but is it credited back? I guess I kind of just answered my own question. Is it credited back after you close regardless, kind of like with earnest money, or are they different in that?
Yep, as long as you go to the closing table, that money is credited back to you.
Any other questions?
I have a question. What does I guess the programs for like first time home buyers, do they work for like particular homes, or if you're looking at new constructions, do the builders have their own type of like programs for first time home buyers, as far as like what April was talking about? Does that make sense, or is that like a weird, ignorant question?
It's not. No, it makes sense. It makes perfect sense. So as far as the actual programs, so as lenders across the board, most of us pretty much have the same program. So like the NC Housing Finance Agency, you could get that with me, Wells Fargo, Truist, Bank of America. Like we all have the North Carolina Housing Finance Agency that offers those programs. So generally what you'll find with the builder is that they may say, okay, we'll give you money towards your closing costs if you'll use the lender that we partner with. But there's no like specific program that a builder would offer just because you're a first-time home buyer. But those programs like the NC Housing Agency, if you were using something else, another program NC Housing has is called CPLP, Community Partners Loan Pool. If you were using that program as well, it wouldn't necessarily matter if you were buying an existing home or buying new construction. You could still utilize these programs with either type of home purchase. Did that answer your question?
It did. Thank you.
I have another question. I think this was something Shantae mentioned, but you were talking about after the due diligence period and we sit down and decide what we want to ask the seller to be repaired or credited. You mentioned some type of closing document that we go over right before we go to the closing table.
I mentioned the closing disclosure with which you will go over with April. So that she will break down all of your numbers and if you will need to bring anything to the closing table or if you wouldn't, just based on the loan product that you have.
Thank you.
You're welcome.
And then also to piggyback off of that, we talk about your numbers at the beginning of the process as well. So you'll get an estimate at the beginning of the process to kind of have a general idea of what amount of money you are needing to put into the transaction. And then, of course, that closing disclosure that Shantae mentioned is the final closing document that has the final number of whatever your loan terms look like if you are bringing money to the closing table. But we do talk about, so the closing disclosure is not the first time you're going to see the numbers. You will see them at the beginning of the process and throughout. But general or standard closing time to purchase a home is 30 days or less, if you're buying an existing home or, one that's a new construction that's already complete.
Okay, gotcha. Thank you.
Is that, April, like on top of like the down payment that you might have? Would that be like included in that total amount? So if there's like, I guess what I'm asking is if there's like due diligence needs, or if there's like a particular amount needed for, I guess, the contract to move forward, would that all come as a solid amount in the down payment? Like you need $7,000, which includes all of this.
Yes. So if, say, for example, I'll just use the $7,000 like you just said. Let's just say we determine your down payment is $7,000. If you give $1,000 in due diligence, Now you're bringing $6,000 because you already gave $1,000. So it's getting credited back to you. So as you put in money through the transaction, it's deducted from the total amount that you need to bring to closing. Did that answer your question?
It did.
Okay. I always like to make sure I'm clear because we're talking serious business here. So make sure everyone has a clear understanding.
I do. It's just another question. I know that like you hear all the time that there are programs for like, you know, that'll help you with like down payment assistance or even like 100% assistance or whatever. Do you still recommend that? I guess you still have some money to, like, you know what I mean, to bring to the table, because, you know, some people could just be like, okay, well, I don't need any money, but it's not typical to not need any type of money down, correct?
Okay, so correct, but I'm actually gonna let Cameshia chime in on this because ultimately you will need some money to actually get under contract. Now, it might be dependent on the type of loan, we get that money right back to you at the closing table, but you will need your own funds to actually get started. But I'm gonna let Cameshia talk about kind of how it's determined how much due diligence you should put forth. But the down payment assistance doesn't kick in at the beginning. It kicks in at the end. So you do need some of your own funds to start the process.
So in terms of that, I think it really depends on price point. So if we had to do a $300,000 home, I would say at least because the things that you pay for up front outside of closing are going to be your due diligence money, your earnest money, your inspections, the appraisal. Those are things you pay for outside of closing. So if I had to estimate just on a $300,000 home, I would say at least $5,000 to $7,000 to get you started. Because, for instance, if I have a house that's $350,000. It depends on the area. On due diligence money is never set. I got a $350,000 home that I got under contract with a $1,500 due diligence. So, and then $500 earnest money. So for that buyer up front, they need maybe all of $3,000 to $4,000 out of their pocket up front. So it really depends on A, price point, and B, location, and C, competition for the home.
All right. We have a couple questions in the chat. If we have to put a freeze on our credit, will that hurt or affect us? So I would say you probably would have to have it removed before you pull credit again, so you can get access to the latest information on your credit report. But that's a pretty easy thing to do to unfreeze it. You just gotta get on the phone and call. What is the minimum credit you have to have? I think for you, April, you can answer that, but I think it would depend on what kind of loan you're going after.
Right, absolutely. So I recommend 640 just because that opens up down payment assistance programs and 100% financing. But there are loan options that can go down to a 580 credit score.
Okay. And the last one, is it a certain amount that you would recommend as a down payment on a home? Who would answer that question?
All right, April can piggyback off of it, but I would say it just depends on the actual loan type that you're using. Obviously, if you have 100% financing loan type, then you won't need a down payment, but you'll need closing costs. So, and I think people get those two confused too in terms of down payment and closing costs. The two are completely separate.
Right. So with your down payment, so as far as amount, like Cameshia said, that's really going to depend upon the type of loan that you have, because there are some, again, that don't require down payment at all. But the difference between your down payment and your closing costs is that your down payment is money that you actually put toward the loan itself. Your closing costs are basically third-party fees. It's all of the people who are, or entities involved in this transaction in order for you to be able to close and buy a house. So your closing costs let's see, what's included in that? The appraisal, like the appraiser has to be paid for their services. The closing attorney has to be paid for their services. We have to pay Wake County, Durham County, or whoever, register of deeds to file and record your deed. Title insurance has to be paid to a title insurance company. I think I might have mentioned your home inspection already, but yeah, your home inspection is in there. Some additional things might be if you do some type of pest inspection, termite inspection, if you want to test for radon, you know, things like that. So these are all third parties that have to be paid in order, of course, for you to make your home purchase. So that's the difference between that. So even if someone is getting 100% financing, that doesn't necessarily mean they don't need money, because just because you don't have a down payment, everybody's going to have closing costs. It's just a matter of how are we going to cover the closing costs? Are we going to use assistance money to cover that? Or are you paying your closing costs? Or did Cameshia and Shanta negotiate the seller helping you with your closing costs? Because that's an option as well. And right now with this market, you can more than likely get something from a seller at this current time versus if you waited and the flux of everybody back in the market. The more competition there is out there, the less you're going to be able to get.
Mm-hmm. Yeah.
How can we, okay, so you can go to my website, homewithapril.com. If you go to homewithapril.com, you can actually schedule, you'll see a link there that says schedule a consultation. And you can actually schedule an individual consultation with me for us to actually discuss your financial picture, getting you pre-approved, what that looks like. I'm not a, hey, just let me pull your credit type of person. We're going to talk about your numbers first. We're going over that debt to income ratio before we even get to credit, because it doesn't matter where your credit score is if the affordability is not there. And I want us to be able to address both of them and not just one of them. It won't do us any good to just address your credit if we didn't address making sure that a home was affordable for you also.
Okay. Cam, how can they reach out to you?
I'm going to put our info in the chat, Shanta, if you can just, you can honestly, for us, it's our website or text, email, call, but we'll put all of our contact details in the chat.
Okay. So I put my information in the chat as well. If you guys have any more questions before we get to the end of this thing, now is the time to ask. No question is stupid or dumb. Just ask, because somebody else is probably thinking the same thing. But I hope this was good information for you guys and you took down some notes and have some kind of guidance on what to do next. Yes, I will download this video once it is done and I'll put it on YouTube. I'll actually email it to you guys probably tonight, and I'll let you guys get access to the video so you can play it back, pause it, take notes, all that kind of good stuff. And then when you start to contact us for any of your questions, you know who to ask. Different types of credit. So that means having different accounts like credit cards, your rent payment, your car payment, your student loans, an open-ended loan or something like that, or a personal loan, just different types of accounts on your credit to make it a robust profile with no derogatories, no lates or anything like that. So as you keep living, you will have that kind of profile. No problem.
Hello.
If someone is looking to move out of state and would like to find a new job as well, what would be the pros and cons of still purchasing a home in a new state?
Come back inside later.
You can be quiet.
No, go find April for a minute. I'm on the phone.
I'd say it's definitely a pro to do that. One of the things that you want to make certain that you do, of course, is talk with a lender. So when we have people relocating here to North Carolina, they of course need to they need to secure a job, but if they're going to be on salary, we can just use their offer letter that says, hey, they're starting this job April 1st. as an engineer or whatever the job's gonna be. We can use their offer letter if they're on salary. If they're moving and they're gonna be paid by the hour, they actually have to start the job and then get their first paycheck, because we need a pay stub because they're paid by the hour and not on an actual salary. But I mean, there's definitely benefit to doing that. It's just a matter of making sure you're talking with a lender who can navigate you through that process, and of course connecting with the real estate agent that's familiar with the area. And I'm sure, like, even for Cameshia and Shanta with the company that they're with, if you were purchasing a home, say in another state where they are not licensed, they can of course refer you someone else within their company that is there that could actually assist you.
Yes, ma'am.
And I am licensed in, I consider myself a Southeast mortgage loan officer. So I can do Virginia, North Carolina, South Carolina, Georgia, and Florida.
Good stuff. All right. Any more questions that you guys may have, please let us know. Cam, did we get through everything except for the last little announcement that we need to make?
I think so.
Okay. All
I
right.
do have a question. I'm sorry.
Go ahead.
Nobody shoot, but I have a question about managing your credit, like through Credit Karma. I've heard bad things about that, but I know that's a good way to see it, but it's not really accurate. So I just want to get your thoughts on that, because I'm pretty sure a lot of people use that. But I'm just curious, like, what's best practice?
So it's not that Credit Karma is bad, it's just the measurement of credit that is not widely used to get you approved for houses, credit cards, or anything like that. Normally, they're looking at your FICO score. So Credit Karma for me is a good educator tool. Usually the score could be 20 to 40 points off from what your FICO is, and that could be higher or lower. But everything else that's on there that it teaches you, as far as like your utilization or what will happen if you pay something down, it's just good for education, but it's not incorrect. It's just not a model that people are typically using. They're normally using your FICO to get you approved for things.
Okay. Well, thank you.
No problem. Anybody else?
Yeah, I had one more question also. My friend Ashley had to drop due to some technical difficulties, but she wanted me to ask you guys, as someone who's purchased a home, if the process is the same the second time around, because she wishes there were some things she did differently. And if you guys had any tips on turning her first home into an investment property.
Cam?
So that was loaded. Okay. What was the first part of the question again? I'm sorry.
The first part was if the process is the same the second time around.
I would say no. I feel like, so I can only speak for my clients that have gone through me. So it should be easier the second time around. You should be very well versed in what's coming next. But again, if not, then that is something that we try to do, is just make sure that you know what to expect every step of the way. So I would say yes, it's easier. And then of course, you being on the call and just seeking more information, you know more your second time around, if that's the case. And then what was the second part of it?
The second part was if there were any tips on turning your first home into an investment property.
Absolutely. I say to anyone, if you do not have to sell your home, do not sell your home. So my very first home, I turned it into an Airbnb. It's generating income for me. It pays part of my mortgage of my new home now. So absolutely, if you plan it right and you have your financial plan in place, absolutely turn it into something that's making you some money.
Good stuff. Good stuff. Anybody else before we get ready to close out? We have some news to share with you guys and a little giveaway as well. So anybody else, speak now. And let us know if you guys enjoyed this content as well. I mean, if you got anything out of it, please let us know, because maybe we can do this every so often so that y'all can always be in the know about what's going on, or educate yourself so you can teach someone else. All right, cool. So hold on. Very helpful. Great, 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 great. All right, so thank you. Thank you so much. All right, so you want to go ahead and let them know what the announcement is?
Yep. So for anyone, actually for anyone on this call or anyone that you may know that maybe need help with credit, that is very interested in purchasing a home, what we are doing, Tamaya and CC and Co Real Estate have teamed up to pay for your initial fee to get into Tamaya's program. So what that means is if you go through the credit counseling program with Tamaya, you will go ahead and pay that initial fee with her. And once you successfully complete that program, you come to CC and Co Real Estate, you get a pre-approved through April. Once you come through all of the channels and complete your home buying process, we will credit that initial fee back to you at closing. So that's a little gift for just being here. And then of course, if anybody else that you know that may be in the same boat, we're absolutely happy to help.
Yes, I'm so excited to be partnering with you guys. So yeah, if y'all need the help, and later on you're gonna go through CC and Co, might as well pick up some extra cash on the back end, knock out two birds, one stone kind of thing. But another thing too that I'm going to be giving away tonight for everybody that's on this call is my Dispute It Yourself guide. So if you want to start trying to work on your credit, I have a guide that breaks down what to do, how to do it, who to send letters to and disputes and all that kind of stuff. I'm going to give that to you guys for free. Now, if you don't need it, you can just give it to somebody else. If you're one of my current clients on here already, don't use it because we already working. So don't do that. Send it to somebody else. But yeah, since you're here, I'll give it to you guys for the free 99. But yeah, that's pretty much it. Thank you guys for showing up for yourselves. Please share this information with other people. I will upload this to YouTube as well. I'm going to send it to you guys. You can send it to other people. Again, I apologize for the list because of my aligners in my teeth. It sounds crazy, but it is what it is. But yeah, if there's anything else, Cam or April or Shantae, that you want to leave for the people, just kind of like wrap it up into a nice little bow or something, you could do that now. And if y'all have another question, you might want to throw it out there real quick. But other than that, we're going to get ready to log off of the call.
I have something that I would like to leave everybody with. Just understanding that buying a home, stop listening to friends, family. We are go-to professionals. We are here for a reason. We want to help you. We want to get you to the closing table. Ask one of us and we will make sure that you are guided the right way all the way home. Please utilize us. And thank you all for being here.
I just wanted to thank everybody for getting on tonight as well. And just to let you know, I've never told somebody no when they've approached me about getting pre-approved for a loan. I won't ever say no. I may not be able to tell you yes today, but I'm going to get you to the yes. So therefore, I don't have to tell you no. So if anything, I want you to leave here feeling empowered. You got some great information tonight, and knowing that there is something out there for you. Home ownership is achievable for you, and that you actually can do it. And like Cameshia said, with the right team of experts, and you've got us here, so utilize us as a resource. We are definitely here for you, and we are big advocates for home ownership and educating as many people as we possibly can.
Hey, I got one more question. Can y'all hear me?
Mm-hmm.
Yes.
Okay, cool. Does the state differ? Does it matter what state? Is it better in some states, like the rates and stuff like that, or North Carolina is like the best? You know what I'm saying? Like Georgia, you know what I'm saying? Different other states, you know what I'm saying? Is my question.
Right. The interest rates won't vary from state to state. I mean, the rates are, you know, what they are.
Got you. Okay.
And really what determines that is based off of your own personal profile.
All right. Yeah. Got you. Just curious.
Okay, and we have another question from Natalie for Cam. One last question. You mentioned there's no due diligence in new construction. Is there still home inspections, appraisals done, but it's on the builder's dime?
Part yes and no. So there isn't a due diligence, there isn't a due diligence fee, but you do pay a builder deposit, and that varies just based on the builder. In terms of inspections and appraisal, you still want to have that. So that is still the same like resale. Once the home is complete, remember humans are building that home, they make mistakes. So inspections will still be done, and the appraisal, the bank still wants the appraisal on that home, and it's on your dime. The builder does not pay for that.
Mhm.
All right. Cool, cool. Shantae, you want to say any last words before we log out of here, or?
Yes, I was just going to say thank you to everyone for tuning in. Also, just remember that we are here to advocate for you guys. And so if you have any questions, even after this, feel free to reach out. Stay encouraged during this process. I know it can seem overwhelming, but that's what you have us for, to just walk with you every single step of the way. So again, thank you. And we hope you have a great night, guys.
Yes, perfect. Yes, but for real though, talk to professionals. Don't talk to people who haven't done it or done it and failed. Talk to people who do this for a living. And you have our information, so no excuses. But yes, until next time, we had a great time. I will again save this so you guys can replay it later. And that's pretty much it. Y'all have a good night.
Thank you so much, ladies. You too.
All right,
Thank you all.
Bye.
no problem.